Okay, for this video, I wanted to summarize all the different types of filings that you're going to need to be doing if you're a non-resident of the U.S. and you open a Delaware corporate entity. Right, so generally there's no restrictions in the U.S. on who can open an entity. This is the appeal with the United States is as long as you have access to the internet, you can go to the Delaware website or Wyoming or Nevada, put in your information, create a company, pay the fee, and you're done. You don't need a U.S. lawyer or a U.S. representative to help you with it. You can do it all by yourself. But once you go down this path, you need to be aware of all the filings that are required. Right, so the most popular jurisdictions in the U.S., certainly Delaware, Wyoming, and Nevada, these appeal to non-residents because they have low filing fees, asset protection's good, and more importantly, they have no state income taxes if you're a non-resident, right? And so that's important because a lot of U.S. residents just set up an entity wherever they live and work because they have to file and pay taxes there anyway. But if you live outside the U.S., you can go with a Delaware or Wyoming entity, and you're just worried about the federal filings, not necessarily the state tax filings. So let's look at the list of filings that you're going to have to be submitting when you want to launch a Delaware entity. So the first thing is always you're filing the Articles of Incorporation. So this is filed with the state to actually open the entity. So this is what you need to do to get started, right? Now, in conjunction with filing the articles, you need to hire and pay for a registered agent within the state, right? So no matter what state you set up a company in, you need a local company or individual that serves as the registered agent. And so that person or company and address is in the state database, and they're there to receive service of process for your company in the event that you're ever submitted with any kind of court documents or you're sued. Those filings go to the registered agent. Right. Now, after the entity is set up, you can file a Form SS4 with the IRS. This is to apply for your EIN or Employer Identification Number. So every U.S. company needs an EIN because in order to file U.S. tax returns, you need an EIN. So EIN is a must-have in order to comply with taxes, and then it's also required anytime you want to open a U.S. bank account. So you're going to need it for that reason also. Now, after that's done, within a few weeks, you want to start submitting the BE13 form. So BE13 is filed with the Bureau of Economic Development, and BE13 is a disclosure of your foreign ownership in a U.S. entity. Now, not all U.S. companies have to file this. It's only U.S. entities that have beneficial ownership that are non-U.S. persons, right? So this is a disclosure that's required. The BE13 is pretty straightforward. It's really just an exemption. But it's important to file it because if you miss it, you're subject to penalties. The BEA will send you notices saying they don't have record of you filing this, and they just keep chasing you until you do it. So you want to make sure you file this BE13 form. Okay, so now on an annual basis, if you have a Delaware Corp, right, so this is corporations, not LLCs. Delaware corporations are by default a C Corp for federal tax purposes. And so that means you need to be filing a Form 1120. With the IRS, you report your gross income, your expenses, and you pay taxes on a net basis. The due date for that form is April 15th following the close of each tax year, ending December 31st. Now, it's possible to change your tax year end. So, for example, if you have a Delaware Corp and you want to make it a June 30 year end, you can do that. And then that changes the tax return due date to 3.5 months following the close of the June 30 year end. Okay, so that's how that changes. Now, this point here, really want to stress this. The corporation should be filing this even if it has no activity or profits. Okay, so the standard, if you read the instructions and the Treasury regulations, it very clearly states that every corporation that's active needs to file this return. The IRS does not care that you were at a loss, or it does not care that you only had, let's say, $100 of expenses. If you have a foreign-owned corporate entity, you need to be filing this form. And this is even more important because of this next bullet point here regarding the 5472. So 5472s are included with the 1120 when you have a foreign-owned U.S. corporate entity. And failing to file this alone results in a $25,000 penalty. So, for example, if you have a foreign-owned corporation and you had a net loss of, let's say, $100, you were still required to file Form 1120 because you need to include 5472 to disclose your foreign ownership. Now, by not filing it, yeah, you might not have owed any taxes because you were in a net loss position, but you now are facing a massive $25,000 penalty because you didn't file 1120 with your 5472 disclosure. Very, very important to make sure these are done. Okay, I can't stress that enough. Next bullet point, file the annual Delaware corporate franchise tax return. So this is done every year to keep the entity active in Delaware and then pay whatever taxes are owed. So Delaware allows you to compute the franchise tax using either the authorized shares method or the assumed par value method. Generally, assumed par value method results in lower taxes if you have a lot of shares that are issued and outstanding, depending on how much your assets are. But you should certainly look at both computations and go with whichever one results in the lowest franchise tax owed. Okay, it's a no-brainer. And then lastly, when you're filing these corporate tax returns, be mindful of when your registered agent service expires. So registered agent service runs on an annual basis from the day you created the entity. So if I set up an entity on September 1st, 2021, I'll have to renew that by September 1st, 2022. That's effectively how it works, right? So you always want to have an active registered agent in the state, because if you don't, then the entity is no longer in good standing and the state could dissolve the entity for lack of compliance with local regulations. So very, very important to be mindful of when your registered agent expires. And always make sure to pay that service fee and keep it active so you're in good standing. Okay, so that covers it for this video and this slide. I hope that was helpful. If you have any questions, please leave me contact, not a contact information, but a question below on the video. I try to get to as many as I can when I have time, so happy to answer those. And I look forward to seeing you again on the next video. Thank you.